We're joined by Aviva's Chief Executive, Andrew Moss. Andrew Moss, thank you very much indeed for joining us. A profit and a higher dividend here. There must be good times ahead here, surely. And let's just walk us through what you see out there and whether you see any green shoots of recovery.
Well, I think 2009 was a very strong year for profitability. You've already talked about the strong return to profit. Actually, it's £1.3 billion net on the IFRS basis. So that's very pleasing. Partly it's financial markets, for sure. They came back strongly, equity and credit markets in 2009. But a lot of it's about what we've been doing with the business. So, for example, we set ourselves a £500 million cost-saving target to hit by the end of 2010, and we've actually exceeded that 1 year early. So I'm very pleased about that. In terms of the external environment, we definitely saw a big uptick in the fourth quarter versus the third quarter. So life and pension sales up 17% in the UK, up 40% across our very large European business. So that's looking very encouraging, and those trends seem to be continuing into 2010.
Yeah, Andrew Moss, also, you know, this is the visibility you have at the moment. You've lowered the dividend again. When do you expect to actually lift that?
Well, you're right. Year on year, the dividend's down around 27%. We've just rebalanced it a little bit so that the final dividend is perhaps a little bit higher than expectations. And that actually is indicative of a higher level of confidence that we have going forward. Everything we're doing in the business is concentrating on increasing earnings, and the dividend will follow from that.
OK, obviously, I can't get away without talking to you about the Prudential's bid for AIA there in Asia, the biggest ever insurance takeover. What are you doing to convince investors that your strategy for long-term growth is in place now when you see a big rival like that going on the acquisition trail?
Well, I think what it does is actually put Aviva and Prudential in very stark relief. It's a very stark contrast now between the two companies. Aviva has a very strong market position across continental Europe. What's interesting, I think, is if you look at external independent analysis, the actual absolute growth in life and savings over the next 5 years in Europe is projected to be something like $1.7 trillion, and that is more than the projections for Asia in the next 5 years. So, you know, if you buy Aviva shares, that's what you're buying. You're looking at very strong growth in Europe, I think, with a lower risk attached to it. Really?
Because most people would suggest that Prudential was the growth stock, and we could argue that Aviva's is the value stock.
I think the issue here is that percentage growth, particularly in GDP and economies in Asia, is probably going to be higher than that is in Europe. But the stock of life and pension assets in Europe is much higher, so you get lower percentage growth but higher absolute growth, and that's the opportunity which Aviva is so well positioned for.
So you're going to be making acquisitions then if you want to make the most of this then?
Well, the footprint we have already is very strong. We're very strong in terms of capital and liquidity at the centre of the group. If there were opportunities in Europe, then perhaps we'd look at them. But I have to tell you that our main focus is on organic growth at the moment. OK, let's just talk about this very conservative, as you called it, capital reserves you had to protect against future losses. You instituted that last year. With the market rebounding as strongly as it has, when do you write that back and when do you give it back to the shareholders? Well, a good example of that is the $1.1 billion of reserves we've got against the annuity book, commercial property book, for example, in the UK. The great news is in 2009 we saw no material defaults at all in that portfolio. So whilst I think it's a little bit early right now to start releasing any of that back, I think as we go through this year and get a more certain view of outcomes there, then there may well be an opportunity. I think it's difficult to call the timing of that. But, you know, the benefit of being cautious in bad times is that when good times come, you can release, as you say, some of that back to shareholders.
Andrew Moss, thank you very much indeed for joining us. Andrew Moss there joining us. He is the Chief Executive of Aviva.